Hello again.
Hello again. Isn't it good when the technology finally works?
Yeah.
Yeah.
Kind of rare also, but...
So, my friend, we're going to start a podcast.
I guess we are.
This is going to be exciting and interesting and new.
Yeah. I mean, obviously listen to a lot of podcasts, and then, the one thing you think about all the time is that, could I make my own? And I guess we're going to see now whether that's going to be a good idea or a bad idea.
Yeah, no, I agree. But maybe we should start by just, saying out there to everybody, we hope that they are safe and in good health and looking after themselves and their families in these interesting times, yeah?
Exactly. Important things first, right?
Absolutely. So let's get going. We've got a name. Took a long time to get a name.
But I think we kind of landed on a good one. The name of the podcast, if you didn't figure out by now, is Fintech Daydreaming. And I guess what we should do is try to unpack a little bit what that means and how we actually landed with this name.
I think we should.
Yep.
Go for it.
Oh, so the word fintech or financial technology became a mainstream phenomenon, right around 2008 when the financial crisis hit. And back then, the trust in incumbent financial institution was really at an all-time low. Now, these brand new fintech companies were going to make all these banks completely obsolete. No one was going to need a bank in the future. It was just a matter of time. Do you remember that time, Paul, by the way?
I do indeed, yes. Yeah. And I remember the dot-com boom before that, right?
Yeah, exactly.
Lots of similarities.
There's always a boom. And I mean, what's the same with these booms always is that there's always this kind of super energizing technology optimism. Everything is going to be okay, with technology, and all the problems going to be fixed by technology. Well, I for one was just happy to have a name, a new cool name for the thing that I've been working on for more than 6 years back then. At least it's easier to tell your mom what you're doing for your living, if nothing else. But looking at these cycles, I mean, there was almost like another round of this fintech boom back in 2015 when, the quote-unquote, the blockchain was going to reinvent the money. But I digress. We're talking about fintech here. So, now the year is 2020. We obviously have a completely new type of crisis in our hands, and a lot of things have really gone forward. But the banks are still around. I mean, things really have moved forward and, the services are much better. But banks really haven't lost any of their relevance. You could almost argue that they are even more relevant now than they were back then when fintech was started. So what happened to fintech? Was it all just a daydream? Did something actually change as a result of this? Now, in this podcast, Paul and I are trying to pick a topic for every episode that perhaps gives some context to the hopes and dreams that fintech companies have had for the past decade or so. And we'll try to see if we can better understand what's going on in this industry and, how this new technology is impacting specifically financial services, which is the industry where we both work in. So this is Fintech Daydreaming.
This is Fintech Daydreaming. You're absolutely right. So, dear listeners, welcome to the first episode of Fintech Daydreaming, the podcast by Ville, Sointu and Paul Krogdahl, the two dudes sitting up in Finland. So maybe we should introduce ourselves, Ville, right? So that people can know who we are. So I'm Paul Krogdahl. I am a technologist, a technology freak, I suppose you could say. I work in consulting focused on the banking industry and the banks. I suppose you could say I am a technologist, a father, and a racing car driver. In my spare time, I race a racing car. And even there, it's about the technology and the tinkering more than the racing. I wouldn't actually say that I'm a very good racing driver. Well, I'm a safe racing driver, but maybe not a very good one. But I spend a lot of my time actually trying to IoT enable my racing car, trying to get at the data, etc. So continuing on the technology front, right? But that's me, a quick introduction to me. And people, you'll get to know more about me as we go through these episodes. But what about you, Ville?
Yeah, well, like you heard in the intro a little bit, I mean, I've been in the financial industry or fintech industry for quite a while now. Actually, I'm coming up on 18 years. I started back in 2002. And before I, started looking into how does banking really work and how do payments really work, I was actually working in the telecom industry. And that kind of combination of mobile technology already back then with, WAP and all those fancy cool things back in the early 2000s was the kind of gateway for me to financial services. So I'm a technologist just like you, engineer by background, and I've always been fascinated by how does new technology impact existing business models and in this case specifically financial services. So I guess you could say I'm a fintech nerd. I thoroughly enjoy reading geeky new specifications and all these what some people would consider boring things, and I truly enjoy that. I'm a bit weird like that, I guess. I've worked in different kind of parts of the ecosystem. So I've been working at the technology provider or the vendor side for quite a while. I've been working with projects all around the world in Asia, Africa, Middle East, US. And obviously in Europe as well. But now, for the past 3 years, I've been working in a financial institution or bank here in the Nordics, and I still get to work with the stuff that I love, which is emerging technologies and seeing how we can actually, move the needle a little bit in this industry, in the coming years and decades, if you will. I was just about to say that, if you get to talk about your race car driving, then I guess I need to share a little bit about my personal side as well. I don't have a cool hobby like you, but I do enjoy, watching specifically American sports. And, even at the risk of losing like half of the listeners that we have right now, I have to say that I'm a huge Boston sports fan. So I watch the New England Patriots, the Red Sox, the Boston Bruins, and the Boston Celtics all the time. So I spent way too much time watching American sports. Now, obviously, with the current situation, no sports are available, but I'm sure these things will pick up later on. But yeah, I guess that's a good segue to the topic of the podcast.
Yes, it is. So the current times, COVID-19, everybody's talking about it at the moment, right? So I suppose it's only fair that we do the same, and look at it particularly from a perspective of the banks. That's our focus area, right? How do you think? How have you seen this sort of play out? Where do you think the banks are going to go from here? I've had some really interesting discussions with some of the banks. Discussions around, things like the new way of working, banks starting to adopt to the fact that people are going to start working remotely more. And I think the remote working fits into two categories, right? There's the remote working of the staff of the bank. And I know some of the banks are talking about moving 40% or so of their workforce out to be remote working. And there's also some ideas of utilizing existing branch offices as satellites for their workforce. But it's also the change that's coming to society, to us as people and consumers in the banks, because we also are moving more towards a remote working and remote engagement model, right? We want to have this social distancing. I think social distancing is not going to go away. It's going to continue even though the pandemic goes down, which means that people are going to want to spend less time in branch offices. They're going to want to be interacting with their banks a lot more remotely, which puts an immense pressure on the banks to really refocus back onto digital transformation. Right, a lot of work has been done on fancy front ends. The fintechs have come along and helped to drive this sort of engagement and user experience, etc. But a lot of the banks, I mean, if we're really honest, right, a lot of the banks have neglected to really get up to speed in the back end, in the back office systems. A lot of those are still manual. There's still a lot of manual processing, etc. So I think that's one of the main impacts that I believe we're going to see, right, coming out of the back of this. What do you think?
Yeah, I guess, the first thought that comes to mind when talking about the COVID-19 situation is that is there anything left to be said of interest on this topic? Because, there's almost like everything that you hear on the news and the radio and TV, I mean, everywhere. It's just about this topic. But, a lot of the things you said are actually super interesting. Now, working, inside a bank myself, I can, perhaps, share some of the observations, that working inside a bank, what you see how do we handle this crisis, and talking to my peers in other banks all around the world, I do realize that the way we've handled this, or the Nordic banks have handled the situation, is vastly different from the way other banks perhaps around the world have been able to cope with the crisis. But there's a couple of interesting areas that were obviously impacted quite quickly. Number one was the customer service. So how do we actually make sure that our digital channels are able to kind of cover for the absence of kind of advisory services in branches and all of these things. So we have to move a lot of the physical activities onto digital channels, and it's actually, kind of surprising, but not really surprising that that has worked out quite well. Already before the crisis was happening, there's the long-going trend in the Nordic countries where the number of branches is being reduced, and the amount of cash services is being taken down deliberately, so that when if you do need to deal with cash, you can do that. All those services are available, but since the demand for cash is going down, obviously the amount of cash service is also reducing. So the branches already had been moving into this advisory mode. And even then, the branches were doing booking only or scheduled meetings only type of things, and that works quite well now in digital channels as well. You can, in the same way as you did, booking for a physical meeting in a branch, now you can do that over digital channels. And, I would almost say that, the banks were like in the Nordics, were surprised at how well that had actually worked out. Now, nothing is perfect, but I think, all things considered, it's actually worked out quite well. People are quite used to, with this, remote tools to talk to each other over voice or video. Now, there's obviously the question that always comes to mind is that what about the the non-tech savvy customers? Obviously super important customers for everybody. And how do you kind of do all of that? Well, this is a challenge for sure. The amount of effort that was put before the crisis into kind of educating the seniors and organizing all sorts of advisory and training sessions on how to use modern tools like mobile phones to deal with your banking needs. Those kind of face-to-face things can't happen anymore, at least for the time being, especially when these are in kind of risk groups in many times, these people who are not that tech savvy. So that's a bit of a thing to solve for now. But there's already ways we can reach out over social media, for example, to do these types of things, and then provide information over the phone and through our websites. But it's definitely a challenge going forward, which is a segue to the kind of third thing I wanted to mention before I give it back to you, Paul, is the question of fraud. So if the advisory services become remote, does that actually mean an increase in fraud, in payment fraud, and basically identity theft and defrauding our customers? And this is a big concern right now. We've already seen the a lot of the scamming that's going on, and the fraud cases that's going on have started to brand themselves with this kind of COVID-19 flavor, if you will. The scams themselves don't really look that different. So they're typically related to stealing credentials and trying to get access to your banking. But they are using this crisis as kind of a trigger. So trying to say that because of COVID-19 now you need to do X, Y, Z. Even though the scam in the background is a little bit the same as it was before. So this is keeping us awake at night for sure. And we try to, of course, make sure we reach out and educate our customers as much as possible to us and other banks, obviously, to make sure that, this situation is well understood. The other interesting thing, which is you can actually see from the data is that now that people are, no longer traveling, for example, that gives less exposure for people to kind of be careless with their credit cards in the circumstances where you're kind of traveling and getting exposed to people in with like high volume tourist attractions and so, which are typically a problematic area for card fraud and copying card credentials. Since they are no longer exposed to these traveling situations as much, there's a case you could say that actually the amount of fraud, especially on the card payment side, is a little bit less than it was before. Now, I guess it's just a matter of time before the criminals start to pick up their activities online, and of course we are prepared for that as well. But we'll see how it goes. I think this is an interesting kind of phenomenon going on, with so much traffic moving online, and I think that's going to have an impact on the fraud side as well.
Absolutely, you're absolutely correct. We're seeing a lot more of criminals trying to take advantage of the insecurity and fear in consumers with a lot of new, or should I say, new flavored old approaches. But there's also another side to that coin when it comes to the bank employees. By moving bank employees out of a controlled environment and to their homes, working from home, there's less security in monitoring them. The ability of copying stuff from screens, etc., is also there. So there's also that element from a security perspective, and the move from everybody working centrally in call centers, etc., to moving to working remotely. Yeah, I actually saw a very interesting presentation the other day talking around moving some of the functionalities in branch offices towards supporting a more social distancing capability. And one of the interesting demos in the presentation was talking about replacing security cameras to also have security cameras with heat sensors in them, so they would actually sense when a customer comes in has got a fever or not, right? To be able to say, this person has got fever, maybe we don't want them to be in our branch office at this time. And then also moving towards having branch office visits which are by appointment basis only. The other thing that also is happening today, or was happening before the COVID situation, was very much this, the advisor and the customer sitting together looking at one screen as they were going through processes. I think that's going to rapidly change to either being, double screened or much more remote from each other.
Yeah, I think, since, we're talking about fintechs, I guess we have to touch on the topic as well that, if you look at the kind of news kind of stream going on about, financial technology and banks with regards to COVID-19, I think, both are declaring victory on this. You can say that the banks are saying that we're doing a fantastic job. Everything is like, just like we wanted it to be. And the fintechs are saying that, now finally we have a chance to kind of boost, our ratings and our customer numbers because, we are better at digital than the existing banks. So both are declaring victory in a way. So what do you think? I mean, which one is winning? Are the fintech challengers or the incumbent banks winning the kind of PR battle for COVID-19?
I think that's an interesting one. I think if we look at the numbers that are sort of being presented around, there is a trend at the moment of consumers actually moving back towards the larger traditional banks, right? There's an element of security and trust. So as COVID has hit, a lot of consumers have started moving away from the fintech banks and the neo banks and starting to put their money and trust back into the incumbent banks. Yeah. And I can understand that trend, right? It's that you want to hedge your bets and you don't want to put all your eggs in one basket. And whilst some of the digital-only neobanks have continued to grow, there's also been the opposite side of the coin, right? We've seen very recently RBS have announced that they're going to close Bull, which was their challenger bank that they put up. Now, whether that is actually being driven by the current crisis or not, that's something I'm not going to speculate on at the moment, but I think that it probably has had some of an impact, right? Where general consumers have said, well, I don't know where this is going. I don't know about my financial security. I don't know about the future. I don't know if I'm going to have a job. And I don't know if the banks are going to disappear or if this digital only bank that I am trusting on is going to survive this crisis. So therefore, I can understand that pulling away and going back to a traditional bank, if I could call them a traditional bank. But I also see there's another side of this as well, right? And that's consumers that are confused, scared, and not understanding really what is their options. How are they going to secure their financial livelihood, and what options should they make going forwards? And I think here, across the board, whether you want to say fintechs or neobanks or even the traditional banks, have failed in delivering advisory capabilities and services to the consumers across the board. There's always been, for the select few, there's always been, a relationship where advisory services are delivered on a one-to-one basis. But I think with advancements in AI and cognitive computing, with the sort of move towards ecosystems and platform business models, I think there's an opportunity here for either, an existing bank or a collection of fintechs, etc., to come together and actually create advanced advisory services that will help individuals in their financial journey, in their life going forwards, right?
Yeah, I mean, I actually starting to realize that this is probably a topic for a completely other episode of our podcast, maybe. But I mean, it's all about efficiency, and how do you actually make the services more affordable going forward. There is a reason why advisory services are available for high tier customers of banks, for example. I mean, it's the simple fact that you actually have to have people working on it, and it's not only the person you're talking to. There's also a lot of research that goes back to it, and so effectively these are expensive services. So the question becomes, in not only in advisory services, but also in areas like trade finance, for example, is that how do you bring the cost of service down? And when you do, does it mean that you're able to reach new customer segments? So, with trade finance services, we've seen that, now having smaller and smaller companies have access to financing, supply chain financing, and invoice factoring, for example, to throw a few geeky terms there into the mix. But on the advisory side, I mean, if the price of advisory becomes more affordable from a services standpoint, when we actually have AI, robotics, and cognitive computing in the background, that means that these advisory services and guiding our customers with their preferences on how they want to manage their monetary lives becomes more efficient and more accurate, more lower risk for everybody involved. And I think that's the kind of thread of how technology actually helps. It's never going to be like a big bang thing that one day I wake up and technology has changed the world. It is really that incrementally we kind of take down the cost of services and make it more trusted, more consistent, less risky, and therefore cheaper to produce, and make it accessible for everybody. Ultimately, this is also the core of the issue in financial inclusion, for example, which I guess is another episode topic going forward. But yeah, I wanted to pick up on the what you mentioned there a while back, which was that RBS's Bo closed down. There's a kind of a interesting history of that project for sure. I mean, a lot of banks were watching that project, looking at, does it really work when an incumbent bank starts their own digital branch, and how does it really work? I guess a lot of the doubters are now happy to say that it doesn't work. The only option is to kind of stick with the incumbent banks and wait for them to transform. And others are saying that there's lessons learned in Bo, and there's still plenty of these projects around that are actually succeeding. I mean, even with RBS, I mean, they still have metal, right? So they are kind of, I think they said that they're combining these efforts, and they will continue on that line. We'll see how it works out. But I guess the jury is still out. I mean, this, what does it mean how do you transform a bank? Which I guess is the bigger question behind these bank projects. Do you kind of do it from the inside by changing the plumbing gradually, and to transforming the culture slowly but surely, which is hard, or do you start a kind of a satellite? Like RBS did with Bo, and then start to kind of cannibalize the core business in a way that of course remains to be seen if that's an effective strategy. At least it's a very challenging one. And I guess the third one is if you actually just acquire a digital bank, and then try to kind of take the culture from this digital bank and try to kind of protect it, and also make sure that your existing banking operations are adapting the practices from the good practices from this digital banks, and keeping the bad ones out. But yeah, I think those three options are a lot of the bank boards are looking at those questions right now and trying to think, how do we actually make this happen? Because one thing is for sure, the banks do need to transform, and they do need to be more efficient with a lot of these things. And we just need to figure out how that's going to happen.
Yes. And I think it demonstrates it's not easy, right? It doesn't matter whether you are starting up as a fintech or a digital-only neobank, or if you're incumbent bank trying to branch out into more digital capabilities. It's not necessarily easy. It's a difficult game to get involved in, and some are going to win and some are going to lose. Yeah,
but I'm quite sure that different regions and different kind of parts of the world will have different solutions. So something that works in the Nordics perhaps doesn't work in Southeast Asia, for example. So we will see different results around the world. I think we will never have a definitive answer to this question either, which I guess is the way the world just works.
Absolutely. Considering where we're going to end up out of the back of COVID and what some people are calling the new norm. I think we're going to start seeing a move towards Society 5.0, where ecosystems and platforms become even more important, and this collaboration rather than competing becomes a new pattern. So maybe for our next episode, we should look a little bit more into to platformification of banking. The long-term vision of open banking and ecosystems and where that model is heading. What do you think?
Yeah, I think this collaborative approaches to building new value propositions is interesting, especially because if you look at the one thing that fintechs have actually changed in the banking world, it is that banks are now more open. Whether that is through regulation like PSD2, and banks opening up their APIs because they have to, or whether it's an actual culture change in banks where they've realized that opening up actually means that the banks get to focus on what they want to focus on, and leave the complex and fancy new things for partners to develop, for example. So I think this kind of collaborative approaches and partnership approaches is one of the concrete things coming out of the fintech phenomenon, and I think it's a good idea to discuss this ecosystem approach perhaps in the next episode.
Yeah. Okay, dear listeners, that was the first episode of our podcast on Fintech Daydreaming. In the next episode, we'll look further into the future of open banking, or more platformification of banking, and where we think that's going, or some thoughts from Ville and myself on that future trend. I'll leave you with one thought, and that's around the trend of fintechs, as we're talking about that and focused on that. The fintech model to date has been focused around the fintechs cherry picking off existing banking services and then creating new fancy wrappers, digital wrappers around them, going to deliver fantastic user experiences. My thought on this is really what it's doing is unbundling banking. The fintechs are unbundling banking and creating these apps for users to have on their mobile phones. My question to you is, does this mean that we're heading towards a future where you as a citizen, a consumer, a person, will end up with your banking life being spread across a multitude of different apps on your mobile device that are not interconnected, and therefore, as I said, unbundling and complicating your financial life even more? Is that a direction that we are going in? Is that a direction that you would like to go in? Or do you feel that future of banking really should be about bundling back together these banking services and capabilities, but for them to be wrapped around a advisory capability that really guides and helps you towards being able to feel like you've got financial security? I think that's a good question for us to go into in our next podcast. And Ville and I are grateful that you've stuck with us for this first episode. talk to you again in about 2 weeks' time.
Thank you for
you.
listening.